And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. March 30th, Monday, 2026. Hope you're having a good day. Hope you had a good weekend. Hope you are not a Duke fan as they handed Connecticut the game. I did not give out picks on Friday, but I must tell you, I had going to the Final Four, Arizona, Michigan, Duke, and not Illinois. I forgot who I had. So I had 3 out of 4 going into the Final Four, and we'll give you picks for the Final Four. I got to tell you that Michigan, Arizona should be the final game. I bet the only bet I made this weekend was Michigan, and they just blew away the other team. And that was that. But anyway, I feel, when you see something that just stands out. So the young man that threw the ball pass to where Connecticut got the ball and the man was able to shoot a three-pointer from like the logo and hit it, was asked the questions, and is a freshman in college, and he was a man's man, took it. I've seen professionals not take it like that. Love seeing that. I think the guy's going to be a great professional going forward. Go check out the interview if you can. All right, that's enough of the sports today. When we say serious talk, we get a little more serious today on you and everything. The markets, the economy, your job, your industry, the war, tariffs, all that other oil prices, and what happens next. But we're going to do all market today. We have to. Because we'll explain. If you don't get this radio show in your city, we'll post it at GaryK.com. We'll also post on our X feed. If you don't follow us on X, you should. Just put our name in. If you'd like to email us, just be nice. By the way, we'll also post it on the YouTube channel, BizTV, and other podcast apps. So, what do we try and do here? We try and guide. We don't tell you to buy, sell, short, or cover. But we will say on this show, this is leading, this is lagging, this is topping, this is bottoming. This isn't a bull market, this isn't a bear market. And we're very descriptive, even though we don't show charts on this. And we always try to explain to you, there are a few lines that we use when it comes to markets. One of them is the weight of the evidence. And that comes from Stan Weinstein. We stole it from him. Great technician, greatest of all time, I think. And what that simply means, when we say to you on this show, well, imagine if there's only 100 stocks in a group, in the market, and let's decide that we know what an uptrend looks like. And those 100 stocks are in a definable uptrend. And they are all even. They're all 1% of the index. Well, you have an uptrend in the index. Well, what happens if 25 of them stop going up and start going down? Well, the index is getting a little headwinds. And of course, you want to avoid those 25 and stick with the 75. And again, you are assuming we know what an uptrend and a downtrend is. And by the way, things that don't go from uptrend to downtrend, they top out first. And then they start heading down. But for the example today, we're saying they're going into a downtrend. And what if the 25 continue down and then 25 more go from uptrend to downtrend? And we'll define downtrend as stair-stepping down, meaning instead of going up 2, down 1, they're going down 2, up 1. Well, the indices will probably be flat. 50 up, 50 down, they're all even, Steven. And let's say they're all moving in sync up or down. But what happens if 25 more head in the downtrend? And what happens if they all? You now have a definable downtrend in that index. noting that they are all the same as far as influence, versus what we have in the NASDAQ 100 right now, where I think 8 stocks are like 65% of the index. So we want you to imagine that. But the market is different. We talked to you about 200 sectors and subsectors, countries, commodities. And I can promise you, I don't think I've ever seen 100% in bull markets and 100% of them in bear markets. Right now, we have a bunch of bear markets, not in oil. Not in oil at all. I can tell you that Johnson & Johnson and Merck are not in bear markets, but I can tell you Eli Lilly and AbbVie and other drug companies are. So our job is to decipher, but really decipher when it's a big group, an important group, and the like. And it's doubly important to decipher when things go awry. And why would that be? Well, because as we have explained to you, Wall Street is always bullish. You do know that, right? They're always bullish. You do know that buy recommendations will only be changed after something drops 75% for the most part. You know that, right? So, we have a couple of more very important areas to add to the nausea. Two of the ports in the storm get added to the nausea, but this did not come out of nowhere. Because one of those big areas we told you topped and broke the 50-day a while back, days ago. And we also noted the strongest stock in that group reported gangbuster earnings. It was still selling off and broke that all-important 50-day moving average easily. Easily. And that would be the semiconductors. So, the semiconductors have performed admirably. The equipment guys, Applied Materials, ASML, KLA, Lam Research, Micron, as DRAM prices went vertical, Taiwan Semiconductor, persistently pretty good. All pullbacks, even some vicious pullbacks, were bought up and ramped. But in the last few weeks, little complexion change in that price has mostly lived below that all-important 50-day moving average, which is basically a line of good versus potentially not so good. And then Thursday broke down off of living below the 50-day moving average. Friday continued, and today slammed. They took out the semiconductors and kicked them in a very bad spot, and all day slammed. They were worse, but they only came off a little bit of the low because the Dow went from down 100 to up 50 in the last 20 minutes. But the SOX today was down 315 juicy points. Deeper below the top and deeper below that ever important 50-day moving average. I have 75 semiconductor stocks sitting on my screen. Not one was green today. And most all now have broken support and or moving averages with a good taste of volume. But it's not just that, because last week we told you NVIDIA broke vital support at 170. The head honcho top dog Big Cheese that has earnings acceleration of 33, 54, 60, and 82 sells off. A CEO that is out every day touting his company sells off. Up next, we'll keep going. We got lots to say today. This is the one and only Investor's Edge. So, NVIDIA, massive acceleration of earnings, is trading where it did last July and is off the highs of 212 at 165. 35.47 is down about 22, 23% from highs, which, by the way, is not the biggest of deals, except it was underperforming while the semiconductors were going north. And as soon as the semis top, it breaks that vital support. Not good news. Broadcom, the other big one, big top. AMD, another big one, never got going. And as I go through my screens, the all-important Lam Research broke the 50-day moving average 3 days ago, dropped another 5% today. KLAC dropped another 4% today. ASML dropped another 4% today. AMAT dropped another 4%, and they're all living below now. Now, I always get the question, so they just broke the 50-day moving average. What if they have a good couple of days coming up? Well, I'm all for it. But we don't predict that. We deal in real time. And all we can tell you now, the weight of the evidence on the semiconductors, they worsened badly today in a market that had the Dow up 400 at one time. So, I'd be wary of the semiconductors. I haven't been able to say that. As you know, when Micron breaks the 50, it's done. It broke the 50-day at 400. It's $320.40 as I speak, down $35 today, or almost 10%. And I've always told you that Micron is most leveraged to pricing. Since pricing went vertical, looks like gravity took over. Now, what could be the big issue with all this? Well, you know our line. Over-owned, over-loved, and over-leveraged. What does that mean? Well, the big institutions, they have portfolio manager meetings every day, and they're going over position and position sizing. And when things are going well, terrific, great, and we own a crap load of this, and it's working very well, yay, yay, yay. And then things go awry. And what do we mean by awry? Well, these institutions see these moving averages. And they know when something caves in, that means institutions are no longer defending those areas, so they have to act in kind. So what do these portfolio managers do in these meetings? How many shares do we have? And guess what they do? Sell some more. And it ends up feeding on itself. So I have no idea what tomorrow brings. Maybe they bounce, I don't know. Today was about as bad a day for the semiconductors as I have seen in a long time. Teradyne, a leader, breaks the 50-day. My screen, I went through it in our webcast a little while ago, of these 75 semiconductor stocks, most all have broken support and or moving averages. Recently, there were a few that looked like they were about to break out. They tucked their heads in like frightened turtles. So that's the semiconductors. But what else? There has been a grouping of the artificial intelligence stocks. And I've used the sector words: optical, memory, data, storage, energy, building/construction of the data centers. And in the recent months, and it's been months, some of them have topped out badly. But that's okay, because not everybody can be a winner. But some of the companies that are involved in building, construction, air conditioning, heating products that are supposed to do the job for these data centers that are being built everywhere, the power generation stuff. Well, recently, they started doing something that you can excuse it, but have in your file manager. After a good move higher, they started to trade what we call wide and loose. And what do we mean by that? And we described this for you already. It's where a stock goes from, let's say, 300 to 500 over the last 9 months. A great move. But then it goes from 500 to 420. But up to 480. And down to 430. Up to 500. Down to 410. Wide and loose. Often, wide and loose after a move up is a sign that the sellers are getting more of the upper hand, and you better start watching them a lot closer. They beat the crap out of the AI, data, center, storage, memory, building, construction, and all that stuff today. The initials, the symbols of some of these names that I've been harping on were blasted today. But they've had days like this before, and they resolved themselves better for the time being. I'm not so sure they're going to resolve themselves better for the time being after today. Today felt like something of more import. So we are now very wary even on the strongest of names. And remember, some of these have magnificent earnings and sales, but when a group changes its complexion, doesn't really matter. They're going to have to go through their motions of dropping, pulling back, or whatever, till they decide not to. But today was an eye-opener. Something like a Coherent breaks the 50-day badly today and drops 10%. FN, that's a symbol, down 11%, breaks the 50-day. How about LITE? I've mentioned a few times, down almost $50 today, 7%. By the way, all these at a little extra volume. SanDisk, down 44 today, or 7%, breaks the 50-day. VRT Vertiv, that just got upgraded and broke out to new highs on Thursday, down 7%. We'll do more on this up next. And some other stuff. This is the one and only Investor's Edge. So, we just want to let you know, a very suspect day for artificial intelligence land. The strongest name in the building construction has been Fix, Comfort System, down $94 today, almost 7%. Oh, and it broke the 50-day moving average. Remember, the weight of the evidence. How about something like Sterling Infrastructure? Same thing. Down $38 today, or 9%. Oh, breaks the 50-day. Oh, 50% more volume than normal. Just letting you know. And there are others. But I think I've made my point. I have no idea what happens tomorrow, but boy, oh boy, for whatever reason, Now, last year there was DeepSeek. They crumbled. They washed it off. We've at other times washed it off. But we also have to add the Oracle that's gone from 345 to 138. We have to add Microsoft 550 to 358. We have to add NVIDIA breaking those support levels. We have to add. And weight of the evidence says something is up. And you know how we are. It is an absolute void on anything that breaks the 50-day, especially if it stays there. And now, the semiconductors are living below and worsen, and a bunch of the AIs break below today and worsen. And I haven't even mentioned some of the names that broke below a few weeks ago and worsen today. One of everybody's favorites was symbol BE, Bloom Energy, another energy. It broke the 50-day 6 days ago at 150. Close at 119 today, down 10% on the day. It broke it days ago. So you're on notice. We're not telling you to buy, sell, short, or cover. We're letting you know things worsen than those two big spaces today. Now, interesting enough, the NASDAQ was only down 153, while the SOX was down 315. How can that be? Well, we're letting you know you had bounces in some of the other things. Meta, which was destroyed in the last few days, was up 10. Microsoft bounced today. CRM bounced 5 today. Adobe was up 5. Costco was up 12. That's a top 10 name. And as I look to my left, believe it or not, the lesser tech today bounced. But when I look at the bounces, it looks like a fly on an elephant's butt. No downtrends were changed. So we're just letting you know two very important areas, which doesn't leave a lot. Doesn't leave a lot. Oils, but oils took it on the chin today. They're very extended. Defense stocks, you ready for this one? We think defense stocks have topped in the midst of war. Does that mean we're going to get out of the war? Well, we're 100% sure we will eventually get the hell out of this Iran thing. And I think we're pretty sure sooner rather than later, for obvious reasons, there's a midterm election. And their poll numbers are worse than jock itch and root canal. And that's the big question. Because you know what I hear from everybody? And I can't blame them for saying it. When the war ends, the market's going to get going again. When the war ends, it should relieve oil prices, which should relieve interest rates, and the market will get going again. But there's only one problem with that. The market was doing nothing before the war started. It was range bound for months, with a lot of areas topped. You know the areas we told you about. The private credit equity crap. Stocks were bombed. Other financials, housing, and housing related. How about the managed care like United Health? So for us, okay, I think that should be a 1 + 1 = 2. Market does better. I'm just not sure we're going to be off to the races. Also, before the war, inflation was picking up. The GDP last quarter was 0.7%, though we're told the quarter we're in right now should be better. At least we're told that. The job market stinks. 87,000, I believe it was, lost last month, and 6 out of the last 12 months, jobs have been lost in this golden age. Dude's funny. Anyway, so there was some issues beforehand, but I'm open to any and all outcome. Just remember last April, Liberation Day. Stocks dropped another 10% after already being weak. And they had no choice. They were forced to change their mind. And the Dow went up 2,000 points on that Monday quickly when it was leaked. But they didn't want to deal with the leak, so they waited till Wednesday. Boom, 2,500 points. That was pretty much the low after a little backing and filling. Maybe we get the same. I'm open to that. All I can tell you is of this second, boy, for the stuff that had been leading, it sucked today. Really bad day. Tomorrow's another day. But if the market had a mouth, it would have been yelling about these areas. What else today? Well, it was much better early. The Dow was up 400. And I can tell you at 3:30 it was down 100, finished up 49. So still not good, because when you're up 400, you want to keep it. And the big indices, all of them are below the 200-day moving average still. And as we have told you, nothing good happens below that. Just letting you know. And I must add also, the Russell 2000 finished below the 200-day moving average today. Not good. And the mid-cap 400, let's see how that finished. A little bit below the 200-day. Remember, this is the longer-term moving average. I say to you, a very important spot is the 50. You damn straight it is. But the 200-day, that puts you in hell. Now, you can break below and get back above. That's fine. But we don't move farther than our headlights go. And we believe in real time. So, rough day. Not a good finish. The fun, good semiconductors, KLAC down 60. ASML down 48. AMAT lower priced down 14. Lam Research down 11. Teradyne down 23. I can go on, but you get the point. With the Dow up 49. The good news is interest rates were down almost a stick today. Interesting enough, though, oil prices were up another $5. Even with the president and his minions all day talking good news. Seriously. Oil was up $5 today while the president's out saying, oh, they're ready to cut a deal. They're cutting a deal. They're cutting a deal. They're cutting a deal. We're coming out of this. We're going to be over sooner. I would have thought oil would be down 5. So that's something we have to watch closely and unfortunately have to deal with on a daily basis. That one has me scratching my head. And you get the point. Bitcoin bounced a little bit, but in a bear market, and actually another bear flag. The solars were trying to do better. They got squashed. Chinese stocks, really bad shape. Foreign markets, much worse now. The South Korean market was acting great. That's broke the 50-day. I got a lot of that going on. Up next, whatever else is inside this head, I'm Gary. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. I guess Jay Powell, the head of the Fed, was in some confab answering questions. I want to throw up. As you know, I have complimented him for the last year, ignoring the president because the president doesn't have a clue on economics. Not a clue. That if inflation's picking up and if interest rates on the long end are going higher, you don't lower the Fed funds rate. You'll cause more inflation. The president doesn't have a clue. So I give Jay Powell credit for the last year not listening to that crap. But as you know, I ripped him to shreds on the printing of money that caused the 9% inflation. And not until it got bad, oops, I better do something about it. He was out today and talking. And I had to throw up. Because he said that printing of money did not cause any problems. Did not cause any problems. I couldn't believe it. Staring him right in the face. He said research shows that purchasing long-term assets, that's buying up bonds with printed money, helps reduce interest rates and boost the economy. Yeah, he's right. And destroyed everything and distorted. You see the problem with the housing now? That's Jay Powellitis. Jay Powellitis. You printed $9 trillion, you rigged the bond market, you take the 10-year down to 0.5%, everybody gets under 3% mortgages. Who the hell wants to sell? So there's no inventory. That means prices are going to skyrocket, makes it unaffordable. Once you get to unaffordable, nobody wants to buy anymore. You end up with a ton of inventory and then prices get slammed. And that's where we are right now. All emanating from this dolt that said today, he was complimenting himself. I'm going to throw up. And now Trump wants to put in a guy. Trump might as well have his hand, 2 hands behind his shoulder, just pulling the strings. Because all we hear from the guy, lower rates, lower rates, lower rates, let's lower rates, lower rates. Yeah, let's lower rates into a higher oil price economy. Unbelievable. We're so screwed. Oh, and by the way, with $39 trillion of debt, it has risen $2.6 trillion in the last year under Trump. The U.S. federal budget deficit as a percent of GDP is now 8.3%. In the 2010s, it was 4.8. In the 2000s, it was 2.3. They hate us. They hate us. And I'm so sick of all of them. Aren't you? I'm hearing from a lot of you all pissed off. And the markets are feeling it. Gary Woodland. He won the Texas Children's Houston Open yesterday. Extraordinary. Life-threatening health challenges, brain surgery, and then to be able to compete at the highest level and gets PTSD to where he doesn't want to be out, but his business is being out on a golf course with a lot of people watching, not only there but on TV. How do you do it? And he came out a couple of weeks ago on TV and gave hope to every person out there that may be afflicted with this, that I know nothing about. And he goes on and wins a professional golf tournament. Unfreaking believable. This is a triumph, comeback of the human spirit, of resilience, determination. I loved it. He started crying when interviewed. I cried with him. If you have a chance, read this story and go watch the interview. I love these stories. They're inspirational. It makes you think about how good you have it when you are not afflicted with health problems or mental health problems or anything like that. Just things to think about. You take a couple of steps back and think about it. This man moved me, and if I ever meet him, I am buying him dinner and shaking his hand, if he let me buy him dinner. I did want to bring that up. And that's a little of today. Miserable day for leading areas and leading names. I'm not sure what's going to come of it. There was rotation today, but the rotation was into things that are already in their own bearish trends. The oils were almost about it for bullish trends. They came in today. They're just very extended. And I'll look them over tonight. Palo Alto Networks CEO just bought $10 million of stock at around 147 a couple of days ago. Was up $7 today on that news. But a warning and a word to the wise. We've mentioned about 7 or 8 big insider buying by CEOs and directors in the last few months. They're all underwater, with some underwater in a big way. Why? Timing is everything. You all have a great evening. Drive carefully when you get home. Do like we do. Quite simple. Make sure you hug your family and hug your children. They will feel better. You will feel better. I promise. Check out this Gary Woodland story. Until tomorrow, have a great night, everybody. Bye-bye.